This video is brought to you by Blue Guardian, the fastest growing prop firm in 2023.
How beautiful would that trade be? That would be awesome. Why? Because we had the buy to sell. We made the lower low. We failed to generate the higher high, made a lower low again. One drive, two drive, third drive is the most highly probable. We swept the previous week's high right in here with this buy to sell. We're starting to pull back into supply. We failed to come into objective, so we have more room to go to the downside. These are the types of setups that we need to be looking for, ladies and gentlemen. What is going on, fellow traders? Hope you guys are doing really well today. Happy weekend. This is Nate from Aerial Effects coming at you with another pre-market analysis video. And of course, you're not going to want to skip through this. We have tons and tons of setups for you guys this week coming up. So stick around. You're not going to want to miss out on these setups. I promise you the hour or maybe an hour 15, however long this video ends up being, is definitely going to be worth your time. If you need to split it up into a few days, I definitely recommend doing so. Make sure you're jotting down all these levels. Keep up with it throughout the week. And trust me, you're not going to want to miss out. So of course, I'm going to start off with the top three pairs, AJ, EU, and GCHF, your guys' favorite pairs by popular demand. And before I really get involved in all these pairs, really quickly, guys, we try to make smart money very simple, very easy to understand and follow and apply. Application is the hardest thing. I don't care where you learn, what mentor you have, what YouTube video you've watched, what course you've taken. We all know the application to the charts can be very tricky. So we try to make it as very simplistic and streamlined as possible. So if you guys are really interested and resonate with the strategy as we're going along and talking about all the setups for the upcoming week, feel free to go to my website, aerialfxtrading.com, and book a free call with me. It's free. We'd love to chat with you, see if you're the right fit for our program. If you are, great. We'd love to get you set up. And if not, at least you know, right? There's no harm in chatting.
Our sponsor, Blue Guardian, is the only prop firm that gives their traders a built-in tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know their evaluations are 40 and 80 days long, giving you plenty of time to hit their low 8 and 4% targets? Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
So starting off with AJ, we talked about this last week. We said that we were just in an extreme bullish uptrend, wasn't anticipating any sort of retracement, but of course that's what naturally happens in the market. So we can be potentially looking for counter trend moves to the downside, potentially next week. It just depends on how strong the market's going to continue to push up. We know that XXXJPY pairs across the board are extremely bullish, so I would not be surprised at all if we just continue to rise. Now, of course, this is all just trickle, right? There's no areas of demand or mitigations that we need to come into. The only one is down in here at this last point of return. You can see here that overall, this is a high, a low, a high, a low, and this is our overall higher high. So all in here is just one overall pullback, and then on a lower time frame, we had some internal liquidity that was run, sell to buy, repriced on a lower time frame, and we continued. So I'm not going to go into everything in depth. I'm going to try to go over as much as I can, but for the sake of time here, we have 17 pairs we need to discuss. So I'm going to try to keep each and every one of these to a minimum. So really what we want to get back down into is 91.35. Of course, it doesn't have to get back down into here. Price could easily just keep going and never retrace. But of course, if price does come back down into this general area of demand, we will be prepared and ready. So we can see here from a clear structure standpoint, obviously we're bullish. Internal liquidity. We have a regular head and shoulders, a skewed head and shoulders. We can see here that we took liquidity from coming into that area of demand, that last point of selling volume before the uptrend started again here. So that's exactly why we mitigated these levels. So if I just get rid of all those drawings, we can see here within the counter trend is the exact same thing we look for every single time. Low, high, low, high. We came into that last point of supply and we failed to generate that lower low. So instead we stopped, had a little bit of a reaction and made that higher high and broke the counter trend structure. So that's exactly where we want to be coming back down into in order to be looking for continuations long. And now of course, price just kept trickling and trickling. So if price does get back down into that level, great. If not, we can look for a couple of things. So what we can see here is that when we broke the structure, we failed to generate that higher high within the current uptrend that we're experiencing. And instead we made a lower low. So of course, I'm going to be waiting until at least Monday of New York session to be looking for any type of setup here. But what I really want to see, because this potential counter trend opportunity, well, first and foremost, it's counter trend. So we do need to be careful. But at the same time, we do need to make sure that all of our rules are being met. Every single trade is its own. It's independent of one another. regardless of our emotions. Psychology is absolutely huge. So within this counter trend, what we could see, who knows, we could build liquidity. If we go like this would be a great smart money concepts play. Counter trend, short-term shorts. We're not looking for long-term shorts. We're counter trend bearish. This does not mean just to sell it upon market open. This just means to look for potential opportunities to the downside if a setup like this arises. So we can see here we have a lot of imbalance. If we come up into that imbalance, mitigate that imbalance or really just fill it, sweep liquidity if it builds up and make that lower low, then we know that something in here could be good for a mitigation and a continuation, and that would be our short. If that doesn't occur, and if we just continue to the upside, we may run Friday's low, break the counter trend to the upside, maybe have a little bit of a repricing in here, maybe some sort of demand. Then we can look for pullbacks to continue long. So that's something we can look for bullish type of setups, right? So if none of these setups that are pitch perfect come around, there's no point of trading it. We like to see very pretty setups that have time and price structure with it, very simple supply and demand, right? We're looking for very simplistic type of setups. We don't need to overcomplicate our trading, right? If you see it and it meets your rules and it's simple and it's easy on the eyes and it looks great, take it. If you lose, doesn't matter. Why? Because if you're overall profitable, meaning you have a high risk to reward or you have a high win rate, you're going to make money in the long run. Short term doesn't do you well, right? You can make a lot of money in the short term, but in the long run, if you don't do things the right way, it's always going to be bad for you. You're going to always give that money back to the market. So we need to always be looking towards the long term. Not every trade is going to be a winner. That's quite obvious, right? So of course, AUDJPY is extremely bullish, but we may see some counter trend opportunities come next week. So we're going to keep an eye on that. Same thing with AUDUSD. So with AUDUSD, of course, we are bullish, higher time frame. We've come down into that last point of demand, right? When we came in, this is a higher time frame level of demand, by the way. This is back from the 2020 crash when we repriced. We've already went over this countless times before. If you haven't watched the prior pre-market videos that I've been creating for the past couple of weeks, go and check those out. Some of the setups are still valid. You might want to go check them out. They're really valuable. Anyways, last point of supply is in here. We had that last consolidation before that last selling volume came into play to mitigate this level, and now we started to retrace. We reacted from this level of supply. We can see the reaction here, and then we made that higher high and broke the counter trend. So this repricing is really just within this repricing as well. So we came into that level, swept the liquidity in the process, right? We love to see liquidity being built up because that is what generates orders. That is what allows liquidity to be placed into the market via these large contracts that these institutions are placing. So we have to generate the liquidity right in here. 1 touch, 2 touch, 3 touches of this trend line. Create relatively equal lows, getting people on the opposite side of the market so that when price goes and runs the stops, now the liquidity is freed up and now price can go in the right direction. So I truly think that we are going to continue long. I just don't think the dollar is going to be long-term bullish. I truly believe that we're going to see massive moves to the downside on the US dollar. The dollar is pretty much worthless at this point. If you look at it from a macroeconomic standpoint, it's really not doing well. And especially what's going on in Saudi Arabia with oil and Russia, and it's really a mess. So I would prefer to be looking to sell the dollar. So continuations long are expected. However, we may see some counter trend opportunities, right? The 50 EMA on the 4-hour time frame is kind of curving back to the downside. We could see reprices and then continuations, at least back down into maybe this area of imbalance, this last selling volume before we expanded and broke the structure. So maybe some counter trend opportunities, right? It's not always going to be pretty where we're just going to continue and continue and continue. We're naturally going to see retracements at some point. So this is what we're seeing now. And I would like to see further continuations. However, I would like those to be at discounted prices. We talked about that the past couple of weeks, how we wanted around 6,550 into that level of price. However, we can see potential counter trend opportunities with these levels of supply. If price does come back up into these, we could be looking for some counter trend plays to then sell it down into our level at 6,550. So just kind of going to watch out for that and see if those come about this upcoming week. CADCHF. So CADCHF is not my typical setup. However, I do think it has some good opportunities to the upside. You know, we are at least counter trend bullish at this point. I do think that we'll probably come into 6,880, potentially even take out these equal highs here, just getting back up into our last buying volume really before the structure in here was broken to the downside. We had that lower time frame repricing right there. So 6,880 is definitely my target. So I do think we are going to continue long before we go short if we are to go short. But you know, we'll have to see. Well, we can see here equal lows were run. We had that sell to buy. We didn't make a higher high, but the most important thing is we failed to generate the lower low below that level, came back down into that last selling volume, just that consolidation block, filled in this imbalance, swept a lot of liquidity in here, and then just made our move to the upside and then made that higher high. So definitely want retracements for continuations to the upside. I do think that this 6,750 level is good. We have a lot of imbalance in here. So it could be in for, one touch, two touch, three touches, sweep of that liquidity. So getting people to buy with this trend line, sweeping their stops, and then continuing in the upwards direction until that higher time frame objective here at 6,880 is met. Again, the reason why I said this is not my typical setup is because we are technically in consolidation and we really don't like to trade consolidations. However, I have this, hunch that we are going to go long, and the fact that we're building liquidity here provides that opportunity into this area of imbalance to look for buys, because that would be the sweep, the mitigation, and the continuation. All right, so that is CADCHF, and we'll just continue to monitor that throughout the week. EURAUD. So EURAUD is looking at providing us with a great opportunity. I was really hoping that we'd get the pullback into our level here, but we didn't. We ended up continuing. If we do get an overall retracement, I still think we are going to continue long. We do have relatively equal highs. We have an unmitigated level of supply up here. The reason for this is because we can see here with one touch, two touch, three touches of this trend line, a lot of retail is probably selling with this trend line. So we can see the manipulation that occurred, buy to sell, and then we had that repricing here. It's better seen on the lower time frame because we actually did come up and mitigate a level of supply there. But for the sake of time, we're not going to go into that. We are overall bullish, I will say. So this could be just one of those head and shoulder fake outs, right, that we could see here. Fake out, accumulation, continuations. So even if price were to go short, I think we still need to come back up into this level, right? This area of supply sweeping these equal highs. So with that being said, not only are we higher time frame bullish, but we're lower time frame bullish as well. So on the lower time frame, on the 1 hour, we can see that we are starting to accumulate very discrete lower lows, lower highs, and we finally stopped. We can see that this is the last point of supply right here. We came into that very nicely, failed to generate the lower low, and instead made that higher high. So that little repricing that we see here, followed by this huge imbalance, that is something that I would be looking to target. And guess what? 1.6 psychological level. Definitely a very good key level of interest for us to continue to look for buys. What we can do as well is we can look at the VFIs. This is what I look for when we see clear distribution or accumulation to see if there's any volume price divergence. And here there is huge divergence. We can see that price is still falling when volume is rising. What does that tell us? That tells us that when volume is starting to pick up, they're offloading their orders here, getting people on the opposite side of the market, really just switching over to bulls, essentially. So everything has some sort of explanation behind it. It's not just because, when volume is pushing up and price is pushing down, that means it's a potential reversal. Well, why? How does that happen? We know that the market is all just about transactions. It's about a buyer and a seller. There is nothing more than that. Buyers and sellers in a market, that's what make a market, right? So if the institutions are offloading their positions, right? If they're getting out of their shorts, now retail traders naturally are going to be looking, to sell with the trend currently, right? But if volume is rising, they're getting out of their shorts, more buying volume is starting to come into play. They're accumulating orders prior to continuing with the trend. So when we're pushing to the downside, naturally what retail is doing is obviously selling. But what happens is the reason why volume continues to push to the upside is because when retail is selling, who's buying? The institutions. So who overpowers the contracts and the liquidity there? Well, these big banks and institutions. So naturally, the volume is going to start to come in when price is continuing to fall. And when finally we break structure, now we know that this is, for one, a high chance of continuations to the upside and a reversal. But now we know that this is a great confluence for our trading so that when price comes back down and tests that last point of demand that we talk about, right? Now we can know that this is a very highly probable zone. So of course we have to build confluences with it. It can't just be a random accumulation or distribution with volume price divergence in it, right? That's a good confluence, but there needs to be more than that, right? We need to put together confluences to put together a very high probability trade. So with that being said, We have the accumulation, we have the break of structure, we have the repricing, we have the imbalance, we have the psychological level, we have the price volume divergence, we have the objective, we have the buy side liquidity. So we're looking really good for further continuations. If we do get a break to the downside, that would be really nice to see. I'm hoping we do get that retracement to go long, but again, we'll just have to see throughout the week.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
All right, EURGBP. So with EURGBP, and sorry guys, I do apologize. I'm so used to going down my list. I really like to do AJ, EU, and GCHF because those are the top pairs that you guys trade. But since we're so close, we'll just keep going down the list here. But I do apologize with that. Anyways, EURGBP, there's not much to it, to be quite honest. I do think we are starting to accumulate a little bit. We are higher time frame bullish still. And what we can see here, and I know it's blurry, I'm just zoomed out a lot. But we're coming into a last point of demand in here. I know that was an area of demand that we were looking at originally. However, even though we did break, this could be classified as a liquidity run. Liquidity run, accumulation below old lows, mitigation of this demand, and continuation. So I'm not just going to be placing buy limits off of this level, but what I will look to do is when price gets into this level here, especially because we can start to see the accumulation, right? Just like we saw on EURAUD, it looks very similar. And also we have perfectly equal highs. This high right here did not take out that high, not even by a pip. Right, so we have perfectly equal highs. What does that mean? Buy side liquidity. What I would like to see, maybe some sort of accumulation. I don't know, some sort of liquidity purge, sell to buy, break that structure, pull back maybe into demand or some sort of sponsor candle, and then we can continue to the upside. And then at that point, if we do get that break and we have all the confluences for a buy, what else do we have as well? We have the objective. We have a level in which price finally stopped its pullback before continuing short. So we had that reprice in that last buying volume. That would be that area in which we look to get out. So of course, guys, it is so important to, for one, have a stop loss for every single trade, but also have objectives, right? You're not just buying or selling randomly, because if you're buying, that means you think price needs to go to the upside, but there needs to be a reason why. Price doesn't go long just to go long. There's always a reason behind every single move. So if you cannot identify an objective, that's just one less confluence that you have. And obviously the market's never guaranteed. So the more confluences you have, more likely or not, it's a higher probable trade, right? So everything's probability. Okay. So with that being said, we have that objective. Now we know that, okay, if price does come back down to this level, if we do get just some sort of smart money concept move, I don't know what it's going to look like, right? It's Friday, markets are about to close, and we could see a potential, maybe head and shoulders. I don't know what in the world's going to form. Liquidity run, maybe some clear sell to buy, reprice, continue. We come back down, build more liquidity, maybe buy to sell into this level. Right? Build liquidity here, buy to sell to buy. Then we have another opportunity maybe down in here somewhere. Who knows? There's so many things that could happen, but understanding the concepts and the underlying nature behind why price does what it does is so very valuable, because now you can train your eyes to start seeing these things on a day-to-day basis. And you don't have to be looking at the chart 24/7. You can be looking at it for an hour, doing your analysis on your pairs, and then going about your day and setting your limit orders, because you know what you're looking for. And if you don't get what you're looking for, then you don't trade it. It's just like following a trading plan. But the problem is people just don't know how to follow their trading plan because they get emotional. So many other bad things can arise. So that's what we'll kind of be looking for. We're going to take it very easy. We don't need to force anything. If we have a beautiful setup that arises from all those confluences, great. And if not, we just move on. There are 28 pairs, right? 28 currency pairs that I have here, I think, just about. So there's plenty to trade. We don't have to worry about that. EURUSD. So with EURUSD, obviously we came into that higher time frame, these two levels of demand. We only came into the first. We didn't come into the second. But anyways, we can see that accumulation that we had, right? The slowdown in price, right? The discrete lower lows and lower highs, the break of structure, the reprice, the failure to generate that lower low, more accumulation, and then we had the continuation and the reversal. So now we know that price is likely to continue long. We need to be looking for continuation to the upside. And what's beautiful about this, we also have equal highs. Boom. That's liquidity. Mark that off. Perfect. Equal highs, that will be the target most likely here. So what formed last week? Well, we were in this channel upon market open, let me see, where is Monday? Sunday was right there, so Monday was right here. So we weren't creating the channel yet, but we were right here. So what I said was we have the opportunity to one of two things. We could follow the lower time frame structure, meaning high, low, high, low, high, low, high, just keep following all this structure, right? Just like that. Or if we get a break, we could be looking for potential opportunities upon an overall pullback for continuations, right? Because if this is the higher time frame zone and we had the reaction from it and broke on a lower time frame, when we break here, if we do, or if we did, whoops, let me do that again. If we were to break here, that doesn't mean we're just bearish. It just means we're probably experiencing some sort of overall retracement, right? For that higher high, higher low, higher high sequence on a higher time frame basis, right? So that will be an opportunity for us. Right now, I talked about these two levels. We had this last selling volume here and then that order block right there. So we started to create the channel. So I naturally thought one of two things could occur. We're either going to have a sell to buy or we're going to have a buy to sell to buy. Why? Because if we break the channel to the upside, what is retail doing? They're trading the breakout. They're buying right there probably upon that 1 hour time frame candle closure. They're buying and a little bit of profit. Woohoo! Nope, right back to the downside. Hits their stop loss below the low. Now price can continue, and that's what creates the buy to sell to buy. All right, that's that type 2 manipulation that we talk about within our course material. So I fully expect price to continue long. If we do get a break to the downside here, I will be looking at within this area of accumulation, right? This last selling volume right there. Why? Is because this is the push that failed to generate the lower low. This is the expansion that broke the structure. Where is that final selling volume? Just really right in there. So we have a little bit, if you look on the lower time frames, there's a little bit of a tiny level of demand. And in here we have a lot of imbalance as well. So if we do break, that would be that higher time frame retracement level in which I'd like price to come into. But I think that price can continue long. I do think so. Dollar is quite bearish from a higher time frame standpoint, in my opinion. So with EUROCAD, now, EUROCAD's a little interesting. So with EUROCAD, we are definitely bearish. We have equal lows here. We're currently, at this current time, we're definitely bearish. We're making lower lows, lower highs. We've been making lower lows and lower highs since May 3rd. So for the past couple of months, we have been trending to the downside. So why try to fight it, right? Why try to fight it? So what we have is an opportunity to continue off of the lower and higher time frame levels. Now, where are these levels? Well, we have singular push, overall retracement. So what is this overall retracement or uptrend here? This is just an overall pullback, right? Every single uptrend on the lower time frame is a higher time frame retracement or expansion, depending on if you're higher time frame bullish or bearish. If you're higher time frame bearish, this is just a pullback. If you're higher time frame bullish, then that would be an expansion, but obviously we're bearish, right? So finally, continue to the downside. Again, this is just an overall retracement. Could we come back up into that last repricing event here? Really, this is the last buying volume before we started the downtrend. And then within this last buying volume, we had our repricing right there. So we could come back up into that level. I was hoping we would do that, but we didn't. We had a little bit of a push down. The reason why I have these trend lines is to show where liquidity is lying. Right? We have 1, 2, 3, 4, 5, 6, 7 touches. And then in here, we have 1, 2, 3 touches. You can see how retail is being involved in any way, shape, or form here. And you notice how they lost every single time because retail doesn't know what they're doing. So what we have is an opportunity to continue to sell with the trend. So either one of two things, or one of three things, in my opinion, could happen. We could just pull back up into this last repricing event, right? This is where we swept all this liquidity in here, came back up into that last buy to sell volume. That's a sponsored move. We had that big push up, swept liquidity in here, big push down. That's a sponsored move. So had that mitigation, so that buy to sell, and then this doji candle right here, that's our repricing on a lower time frame. So that's that area of supply in which we could look to push back up into before continuations. Or this is all just a liquidity run, right? Because retail was involved in buys. We swept the liquidity, and now we can continue with the upside direction into this higher time frame objective right there. So with that being said, if that is going to be the case, then what we could see potentially is, some form of accumulation we have a reaction, failure, high or high, we go like this, and then we could be looking for pullbacks to continue, right? It would be our high, our low, our high, pullback, just continuations to the upside. So of course, what is everything that we look for? We are looking for structure on a higher time frame standpoint first. We're looking for these higher time frame areas of objective to guide our lower time frame trading. Once we see the lower time frame trend, we look for these intraday opportunities via these supply and demand levels, via these imbalances, via these time and price manipulations and sponsored moves, and all these things that we could see. And of course, nothing is guaranteed. Nothing is 100%. So fine, if we do come back up into this zone here, and we get a reaction and we maybe come into an area of demand and we fail to generate the lower low with the overall trend, and we stop and make instead a higher high, then we know probably that we're likely to pull back and continue long. And now we can potentially take buy opportunities if one arises. But if not, we're going to be treating this as just like a lower low, lower high situation. Lower low, lower high, hopefully maybe lower low, lower high into that last point of supply, and then continuation. So EURCAD isn't the best looking setup, but still looks good to the downside. GBP Swiss franc. So same sort of deal here with GBP Swiss franc. We are higher time frame bullish. Right? We are broken structure back up to the upside. I would like to see further continuations long. We are at lower time frame bullish as well. Not only in here, when we swap liquidity, sell to buy, reprice, continue, but we're also bullish in the lower time frame as well here. So continuations to the upside is definitely expected. We have two levels. We have an unmitigated higher time frame level. This was the level in which we bought it originally. We had a great trade from this level, but then price just expanded the upside, didn't have a deep retracement, and then just continued. So maybe this could act as sell side liquidity, sweep that liquidity, come into this imbalance more, maybe that last selling volume, just getting deeper into discount and then continuing to the upside. Or we just continue with the lower time frame trend, high, low, high, low, high, and we just go like that, right? So with that being said, let's scale into a lower time frame to see what we can find. So in here, let's understand the structure. We have our high, we have our low, we have our higher high. This is all one expansion. On a lower time frame, it's a trend. This does not mean it's a break of structure and we're going to pull back and just die. It just means that we're likely to experience an overall retracement just like we had here. Just because we broke the structure here doesn't mean we're overall bearish. It just means this is just an overall retracement for continuations, right? Because we're bullish. So I like this level down in here as demand. Reason why is because this is supply. We came into supply, failed to generate the lower low, consolidated, and then made that higher high, so that will turn into demand, that supply to demand flip. All right, so ended up sweeping liquidity. We have 1, 2, 3, 4, 5 touches here. We actually had that break and retest, so retail tried to get in short. Oh, nope, right back up to the upside. So right back up to the upside, what I mean by that is, I mean that it doesn't mean that right back to the upside, oh, now we're just gonna continue bullish. We could have, but it just means sweeping liquidity from anyone who is selling in here. When price gets back down in here, what are people doing? Probably putting their stops above the previous high, right? It's all a game of sweeping liquidity and mitigating orders. It's just this retail type of stuff is all a playground for these institutions, right? That's why retail loses, right? Even if you have a couple $100 account, but you have a million traders, well, that adds up. So that's why these banks are making so much freaking money. Anyways, we're looking at this as our higher time frame level of demand. So we want price to retrace into our level before looking to buy, around 1.3 psychological level. Notice how these psych levels line up with these orders and these areas, right? So looking for continuations to the downside does not mean to just sell it. Come on, let's be real. Does not mean to just sell it, okay? It just means that we could see counter trend pullbacks into our level before looking to buy. Now, could we sell it? Potentially, but what would we need? We would need a setup. I know you're probably laughing because it sounds so obvious, but you'd be surprised how people still fail to realize this. What do you still need to take a trade? A setup. You need rules. You need discipline, right? So just to think that, oh, we're bearish now, I'm just going to sell it because we're likely to go short, you need to get yourself checked because that mental capacity that you have is not good. Right? I'm just being blatantly honest, okay? Because who thinks like that? If you're a professional trader, do you think, oh, it's probably going to go down. Let's just short it, right? Who cares? Let's short it. So stupid, right? So what we can see here, equal highs, buy to sell. We came up into that sponsored move, 1 hour time frame. We mitigated that level, and now we're starting to push lower. But of course, this is Friday's high, that's Thursday's high. What we could see is, maybe some sort of manipulation, and we go like this. What would that be? Right? And if let's say we have an area of supply like right there. How beautiful would that trade be? That would be awesome. Why? Because we had the buy to sell. We made the lower low. We failed to generate the higher high, made a lower low again. 1 drive, 2 drive, 3rd drive is most highly probable. We swept the previous week's high right in here with this buy to sell. We're starting to pull back into supply. We failed to come into objective, so we have more room to go to the downside. These are the types of setups that we need to be looking for, ladies and gentlemen. We don't need to be trading because we're butthurt about losing a trade. We don't need to be trading because we haven't traded in a couple of days. We need to start acting like professionals, because if we don't, you're going to continue to lose money. That's just straight up. I'm not a nice mentor when it comes to that, because I will hold you accountable. Right? Because oftentimes people continue to do the most dumbest things, and it's only hurting themselves. Right? You need to grow up, and we all need to start trading with discipline, with professionalism, and with common sense. So with stuff like this, that's what you need to look for. So what if that doesn't happen? Do you just I just want to pull the trigger because I know it has to probably come into here? No, it doesn't. It doesn't have to do anything. Price could just continue long all day long. It doesn't have to. But if you have a setup, there you go. You take it. And if you lose, don't cry about it. Move on to the next setup. If you can start to do this, you're going to see more success in your trading. But the people who can't seem to be coachable and don't want to follow these instructions, and they're very simple instructions, continue to fail. It's plain as day. So again, sorry for the rant, but it's so easy to fail in this industry. But it's not that hard to succeed if you know what to do, and if you're disciplined with it, and if you can maintain your emotions in psychology. All right. So that's what we're going to be looking for. Overall buys from this level. If we find a sell setup like I just showed you before, that could be a definite area or type of setup we need to be looking for to short it. All right, that's GBPCHF.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.
GBPCAD. So we have 2 levels we talked about last week. So with GCAD, very similar to GBPAUD actually, which I'll go over in a minute, but we have our higher time frame objective here at 1.7230, right? We haven't reached that level yet. What are we also seeing on a higher time frame scale? This is a high, this is a low, this is a higher high. So where's the range? Right here. From this high or this low to this high, that's the range. So what if price goes like this? Does that mean we're breaking structure and we're going short? A lot of people would probably tell me that. Why? Because they don't zoom out. Zoom out. You need to zoom out. If you know this is the structure, why are we looking to short it upon a break of this structure? What do we not understand about liquidity with that sort of answer that could be given? Well, what do we not know about liquidity? Well, if we say this is a break of structure and we're looking to pull back to short and price goes long, we understand that we need to build liquidity prior to coming into levels. Liquidity freed it up, mitigated the order block, maintained the structure, high, low, high, low, high. This is not a break. This is just a liquidity run. We're bullish. We have a higher time frame objective. We're going long. That's the reason why people who look at this as a break of structure and a pullback to short lose 90% of the time, right? So from a higher time frame perspective, that's that last selling volume. If we get back down into here, this is not a break of structure. This is just an overall pullback. So don't quote me on it because again, nothing's 100%, but that is highly probable to happen, right? So if we get back down into here, I'll be looking to buy. What could this also be? Head and shoulders, some sort of skewed head and shoulders, fake outs, continuation, right? We need to understand what retail is doing, what the mindset of a retail trader is, and literally do the exact opposite. That's how I look at life as well. Why do 99% of people who are making money have a 9-to-5 job? Well, it's to keep them in the rat race. It's to keep them from thinking for themselves. It's to keep them in check so that the elites and the billionaires of the world can stay rich. To keep going. They give you just enough to survive and enough to be happy, sort of, to be content with your life, but not enough to where you could overthrow them. But enough to where you're not depressed and willing to do something about it. It's all a mental game. Even the world in the game of life is all mental. It's all about the mind, right? Same thing when it comes to trading. It's all about the mind. It's all about mentality. So if we get back down into here looking to buy, right? But if we continue with the overall like lower time frame trend here, high, low, high, low, high, we could easily just see pullbacks, continuations, right? Because what did we do? We swept liquidity. We created that sell to buy. We created liquidity again prior to coming into that level. We mitigated. We broke the structure right here, so we could be looking to go bullish again, right? So something like that. So that's why I'm looking to buy here. I'm in a little bit of drawdown at the moment, but I do fully expect price to go long, whether that be from these two levels. So this level and this level here. Why? Well, this is demand, or the imbalance down here. If we see this as sell side liquidity, we could go and run it, sell side, continue long. Or we get back down for an overall retracement back down into here around 1.64225. All right, definitely an option. GBPAUD. Same sort of deal. We're overall bullish, right? I'm actually going to get rid of this. I don't want to look at this any longer. That's no longer valid. Had that for a while. All right, so if we're overall bullish, right, we're extremely bullish. We have to come up and take that high. That's the objective, is to run that liquidity. We haven't done so yet. That's why I really want a retracement now to give the excuse for it to go long again into 1.92 psychological level. But also right in here, we can see with the structure, high, low, high, low, high. We acted as, this was acted as sell side liquidity, swept, continuation long. It's exactly what I just mentioned in the prior pair. Came into that last selling volume, mitigated it, and now we started the uptrend. Okay. So what is also going on with retail here? Well, equal lows, they're probably buying 1, 2, 3, 4, 5 touches of this trend line. When it broke, what happened? Oh, we retested. Retail tries to go short. Nope, right back up to the upside. Again, observe the masses, do the opposite. Observe their shorts, buy it. Right? That's what we need to be doing. Okay, I'm telling you, if you see, get in the mind of a retail trader and whatever they do the opposite, you're gonna make so much money probably. So anyways, now that we have faked out all of retail, we've mitigated demand, we've swept liquidity, whatever, we broke the structure, we're now in an uptrend on the lower time frame, we can be looking to buy now. So we have unmitigated levels of demand here and here. We created liquidity. I was really hoping that we just get back down into here, that'd be some sort of sell to buy. We didn't do that. We ended up continuing long. We have 1.89 psychological level. We have this area of demand right here. So that's a demand. This is demand. This is demand. So either one of these three levels, who knows, right? We could see a little pullback into that imbalance, right? Maybe stops below, this low or this low here. If we get a break of, well, not a break of structure. If we sweep that liquidity sell side, we have this area of opportunity here. If we keep going lower, we have that area of opportunity here for overall long. So either it be this, this, or this. That was bad. I'll mean to redo that so you can see it. So either a couple of options. We're going to be monitoring this next week, because what is the probability that we break and close below this low? If we have all of our confluences in order, especially since we're bullish, what's the chances that we go below this low? Very slim. Not to say that it can't happen. It's just very slim. So buying it from these three levels, you can almost guarantee yourself some sort of winning trade, right? NZDUSD, I love this setup. It looks so good. I'm looking to hedge this actually. So currently we are still bearish on this time frame. We're bullish on the lower time frame, but we are actually bullish on the higher time frame. All right, we've come into an area of repricing. I'm not going to go into all this. We swept liquidity, sell to buy. You have equal highs, could come higher. Dollar's weak. Definitely looking to continue to buy this for further continuations to the upside. So with that being said, let's go to the 1 hour. I said that when we were originally looking for buys from these two levels, when price broke up here and we were looking for pullbacks, obviously we didn't get it, but we were looking for it at the time, that would be a great take profit, because I said, even though we're bullish, if we are to go bearish, where could it react from? This area of supply. Well, what happened? We did react from it. We did. So that would have been a good take profit. Imagine having that entry and that take profit when you had a I'm going to call it drawdown on take profit of 14, 15 pips. So you got the take profit right within 15 pips. That's pretty freaking good. All right, that's what we mean by objective. That's how we know where price is likely to go and where it could potentially stop. That's where we're setting our TP levels. All right, we're going to teach you this in our courses as well. Not only how to see this on the charts and apply it and get entries, but where to place your stop loss and where in the world to place your take profits. How can we extrapolate the most amount of money out of the market at one time? Well, we need to know where it's going. So take profits and stop losses are just as important as your entries, right? Who wants a 1 to 2 when you can really get a 1 to 5, right? But who would rather have a 1 to 7, but would rather stop and get a 1 to 5 and protect that entry because of a level like this that they should be taking profit at, and hope that they go for a 1 to 7 up here, but end up falling and end up breaking even, right? It's all about numbers. If that didn't make sense, rewind that 10, 15 seconds. Listen to that again. Who would rather have a 1 to 2 when you could have a 1 to 5? Who would rather have a 1 to 7, but instead had a 1 to 5 because you took profit at an appropriate level where it could react? Not to say that it's going to react, but it's chance. But guess what? It did react. So now if price comes back down, if we had have gotten in this to begin with, now we've taken our profit at 1 to 5, if it was a 1 to 5, instead of trying to be greedy at a 1 to 7 because you really didn't know where to place your take profit. And now you're break even if it comes back down. But instead of getting your 1 to 1, 1 to 2, when you could get more at a 1 to 5. I'm just making these numbers up, but you still understand the logic. Right? When people are like, oh, I only aim for 1 to 2s. Why? That doesn't make sense. If I have a 1 to 2 and my take profit's right here, why am I taking profit right here? What is over to the left that's going to hinder me from making more money? Nothing. Why? Imbalance, supply, structure. Get more money out of it, right? Think about things from a number standpoint and a more professional standpoint. You're going to start making more money. Don't think about it in terms of retail or what you want out of it. I only want a 1 to 2. Doesn't make sense when you can be making more. But don't say, oh, I want a 1 to 10 and then fall short because you could have just had a 1 to 5, protected your position, and instead of taking 1 to 5, now you're back at break even. Right? Lessons learned the hard way is really the only way. It's the only way you guys are going to learn. It's how I learned, is failing, is figuring it out, is having a hard mentor who'll hold me accountable. That's what I do. That's why my clients succeed. So anyways, we had that reaction. Sorry for the rant. I always do that. I really need to stop doing those. Anyways, high, low, high, right? This is the range. So we could pull back into these levels. We can see that this is the pullback. That's our last buying volume. We had these two repricings. We failed to generate the lower low here, and instead we broke and made the higher high. So these are demands. So I am looking for some sort of, if we get back down into here, buys from these two levels. But at the same time, since we reacted from that higher time frame level here, from that supply, and we broke structure, failed to make the higher high, made a lower low, we can be looking for that third drive into the low. And we have that objective here. So if price does get a pullback, I like to short it because we still have room to go to the downside. So why do I like this so much internally? Well, we broke the structure here, but that doesn't mean that we're going long or short. It just means that it could potentially be a break of structure for an overall pullback, or it could mean a liquidity run, sell to buy for a higher high. I immediately thought liquidity run. Why? Because we're bullish. We're bullish here, right? So anyways, ended up just filling some balance in here, huge imbalance. And then we distributed lower time frame. This is demand. We came into demand. We had a reaction, failed to generate the higher high within this counter trend here, and instead made that lower low. So that repricing will turn into that level of supply. So I had two positions because, having a stop loss, this should be right here. Having a stop loss, this should probably be 20 and a half pips. Instead of having a stop loss of 20 and a half pips, this is a good risk to reward, 1 to 3.4. However, this is the range. This is the range here. Just like this is the range here, right? So we could come back up, hit it, maybe come back up into here somewhere, maintain the structure, but hit out of our stop loss. This is why you can have multiple positions. So split it up, half risk, half risk. If we have the reaction here, great, we're in both of them. If not, and we go like this, well, at least we're in this one still. We lost on that one, but you still should be net profit. So I like counter trend shorts, overall longs. If we get into shorts, I'll be looking to take profit here. If you want to hold a runner just in case we do continue lower, you can, but I'll still be looking to buy, sort of hedging that position because the higher and lower timeframes are in alignment with each other at the moment. All right, USD CAD. So same sort of deal with USD CAD here. Higher and lower timeframes are not in alignment with each other. However, I don't see a higher time frame area of demand that I could be buying from because this is just huge, just a general area which we don't like to see. So overall, we are bullish. However, currently we're kind of bearish here, and I don't want to fight this at the moment, especially because the dollar is weak. I really want to be looking to continue to short the dollar. So potential continuation here, just following the structure, because we could just continue lower, right? Is this level here. And what I try not to do, let's just say there's a area right there. I try not to just take that area right when the market opens because, well, usually we like to run some sort of liquidity before continuing with the overall direction. So this was Tuesday's high, so this previous week's high. So when the market opens on Sunday for me, this would be the previous week's high. Wouldn't be surprised if we ran either Friday's high and continued short or ran last week's high and then continued short there. Now, where could we come into? Well, we could come into this inside supply level. Why is this inside supply? Because if that's the last selling volume, right, we should have had a reaction at least before falling, but instead of the reaction, we just blitzed right through it. So there was no reaction, so that's why we have that inside supply there. So we could run liquidity, come up into that supply, mitigate, fill this imbalance that have formed, and then go short. That's oftentimes what happens, right? And we'll see on NZD Swiss franc, well, actually, I think I already went over that. Oh no, I'm coming up on it. That oftentimes with NZD Swiss franc, because it waves so nicely, I love NZD Swiss franc, it goes like this. It'll go like that, sweep it, sweep liquidity, boom, like that. I love seeing that because you can see smart money concepts in action. You can see it all day long, right? So that would act as that liquidity. I'm just interested in this level. So we'll see what happens come next week. USDCHF, same sort of deal. From a higher time frame standpoint, we're still bearish, right? We're making lower lows and lower highs. Boom. Why do I have this black line here? Well, let's go to the daily. This previous low, I think we're going to run it. I really do. I think in momentum is what we're seeing. I think we're going to come back down and run that low all the way back from 2021 in January. All right. So that's the overall objective around 8750 psychological level. And what we can see here is this previous high was run, right? And then all along this sort of overall pullback, you can see where we had reactions from demand. So every single swing point had its own demand level. We had demand here, right? Higher high, higher low mitigation. Demand here, higher high, higher low mitigation. Last selling volume, demand higher high, higher low mitigation. Sweep liquidity right there. Sell to buy, demand, higher high, higher low mitigation. This was just a huge liquidity buildup. 1, 2, 3, 4 touches, like this head and shoulders almost. So we faked out, enticing retail with a strong momentumous push into the demand, had the reaction, failed to generate the higher high, and instead stopped, made the lower low. So let's get rid of all these drawings here. And in the process, we came back up, swept this previous high, and then we can see this high right here was swept, liquidity run, these equal highs there, liquidity run, and then we fell. So the most important thing to note is that when structure broke, right, we know that this is a swing point, that's a swing point, that's a swing point. This should have been a swing point, right? But instead we failed and we made a lower low here. So we could have taken an entry off of this, and I didn't do so. I didn't see it in time. But when price failed to generate the higher high, we made a lower low. This was the counter trend, high, low, high, low. We had that reaction off the demand. We failed to generate the higher high and instead made the lower low. So that's a pullback into supply, that demand to supply flip. And now we could have taken that short. But another thing we could have done is right in here when we actually had a firm break of structure. We can just take it like low, high, low, high, low. So what do we naturally expect? High for a lower low. So where are our pullbacks or our repricings? Well, we had two of them, one right here and one right here. This is all just imbalance. So we had that overall retracement. We had an initial reaction, stopped, created equal lows, came back up, swept the high, right? It doesn't mean that we're going long because we broke the structure. It's not a break of structure. It's just a liquidity run. To break the structure, you'd probably, honestly, you'd really just have to go have an obvious push, but at least above the previous swing high. Well, that was terrible. Above the previous swing high right here, right? So potential opportunity for price to run Friday's high, come next week, come into this level maybe, and then short off. That's a potential. What could we do? Well, you could probably set a sell limit there if you wanted, or you could wait for the counter trend to be over, have that buy to sell, break the counter trend, pull back, and then short it come next week if that setup arises. Objective hasn't been met yet, so we still have room to go to the downside, in my opinion. All right, a couple more. NZD Swiss franc. So talked about 3 different levels last week. We said that we are counter trend bullish. I want to take a look at the higher time frame. We are higher time frame bearish. However, we have unmitigated levels of supply. I'm not going to go over these again. If you want to understand why those are supply, go check out last week's pre-market analysis. We have equal highs in here, so we have room to go to the upside. We still have that objective that needs to be met, and these are equal highs, so that's naturally, buy side liquidity. Even if we are to continue with like this trend here, that's our last buying volume. We have huge imbalance in there. It's just straight selling volume in there. Just zoom into it. It's our last buying volume, just straight sell off. So at least come back up into this level. We didn't even do that. So now it's like, okay, great. We have all the confluence in the world. High, low, third drive into the upside to at least hit that level there. So what we're looking for is when price failed to generate the lower low below this low here, we came into an area of demand. Now, of course, we didn't buy it off the demand right in here. We didn't do that. Why? Because we're bearish. Why would we buy it right there? If you had bar replay tool, and if you're bearish, lower low, lower high, could we have made a lower low? Absolutely, we could have. That's what you'd naturally expect in a downtrend. So why would we be looking to buy at that level? All right, so this is all just hindsight, right? That's how we build confluences, is look at hindsight. What happened? We accumulated into that level of demand, failed to generate the lower low, expanded, made that higher high on the counter trend, right? So low, high, low, high, low, high, failed below that low. We failed. That was our last selling volume. We made the higher high. What did we do prior to coming into? There was an area of repricing. That repricing happened to be on the 15-minute, as you can see right there with that doji, right? Higher high. We built liquidity. Low, high, low, high, low, high. So it's just trading in the range, and we broke out of the range. So what do retail do? They sell below the level. What do? We buy from demand. That's why retail loses and we win. So guess what happened? Boom, right back up to the upside. We're making a lot of money. So now higher high was made. Again, could we have just trickled a little bit and then continued and just maybe hit into this level of demand? Sure, we could have. We don't always have to have deep retracements. We'd like to see them, but we don't always have to have them. So we had a couple of levels. We had this level here, right? Obviously this area of demand. We came into a little bit of a reaction, created equal highs, and then fell, and then came into our secondary level. So now we lost on this one, and now we're in profit on the levels in which we really wanted price to come into, our discounted levels, right? Getting deeper into discount, I'll just pull my fib, right? Into that 71, 78, 6 level. We don't buy or sell off of fib levels. That's retail. Doesn't make sense, but it's just to see discount and premium. So we had 550. This is just imbalance, 550 psychological level. Good area to buy. Also this doji candle, 1 hour doji, 1 hour repricing event, stops below the low, and now we're in profit on both. So looking for continuations to the upside. We have a lot of liquidity here that we need to run. So maybe come next week, we sweep sell side one more time, maybe, and then go long. We'll have to see. I do fully expect further continuation to the upside. I love trading NZD Swiss franc. I just love the way it moves. So let's just see what happens. We're in profit. Great. If it goes long, awesome. If it doesn't, we move on. AUDNZD. So we talked about how last week that we are currently in an uptrend. Right? We've been in an uptrend here since actually exactly a month ago, May 23rd. Today is June 23rd. So we just kept trickling and trickling and trickling day after day after day after day after day. So what do you naturally expect? Continuations, obviously, right? Because you're bullish. So when price creates a huge trend line and it breaks, entices retail, pulls back up with this counter trend here, and then fails to generate the lower low and makes a higher high, that's a great area of demand to buy it. We had the reaction, never had the follow through, and now we're starting to see a retracement. So now the lower time frame structure has been broken, and I think we're going to be looking to target this level here around 1.0670. Again, if you haven't looked at the full analysis on AUDNZD, I go in and break down literally from top down. It's awesome analysis. Go check out last week's pre-market analysis and then the prior week's pre-market analysis video. Really great content, guys. So anyways, now we're starting to see some relief. Instead of this just trickle, we're starting to see finally a retracement. So when we had the reaction from the level of demand, we failed to generate the higher high, we made the lower low. So I would expect price to pull back into that demand to supply flip and then potentially continue, right? Boom, 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 something like that. That'd be interesting to see. All right, so that's AUDNZD. Two more, AUD Swiss franc. So very similar to NZDUSD is AUDCHF, so AUD Swiss franc. Why? Because we're looking to buy counter trend, but also we've come into higher time frame levels on AUDCHF, and we could be hedging as well. So within AUD Swiss franc, obviously we're bearish, right? When I say obviously a lot, guys. Why? Because it is obvious, right? There's nothing more obvious to what I'm saying. Right? If this can't be seen in an obvious way, then we need to go back to the basics and just look at the fundamentals of trading, because it's really not that difficult to see. Are we bullish or bearish, right? I mean, come on, it's common sense. So where is the structure? Well, we broke it right here. We had a retracement right here. We expanded right here. What is this? Is this a break of structure to the upside? Oh, we started to make higher highs and higher lows. No. Why? Because this is the range. This is just an overall retracement. What did I say in last week's pre-market analysis? I said that we could either have this and then we trickle and then we sell it from there, or price goes like this and we start to wave. All right? Either way, it's still an overall pullback, whether if it's waving or not. So we're actually in shorts here. Phenomenal setup, sent it in the signals group. So congrats to you guys who took it. It's awesome. So looking to buy and sell. Why? Because we're higher time frame bearish, but we're lower time frame bullish, and we have these really great two levels of demand here that price could react from and go long. We could come up into 0.63. It's my overall objective. So on a lower time frame, really great levels of demand here. I would like to see price come into them to start the week and then go long. But if we are to go short and continue with the overall trend, then I would like to see pullbacks back up into our last buying volume, right? For continuation short, right? Break of structure, pullback, continuation, because we are overall bearish on the higher time frame. But could we have that 1 drive, 2 drive, 3 drive? Yeah, we could potentially. Definitely a possibility. And these two levels of demand provide great areas to do so. Again, I talk about AUDCHF on last week's pre-market. I think it's about an hour 15. Take a day, take 2 days, however long it takes. Break it up, 30 minutes each. Watch it. It's awesome. It's really great stuff. Accumulation into that level of supply. What does this look like to you? Channel. Oh, breakout, retail tries to buy it. Nope, right back to the downside. It happens all the time. What is this? Inside supply. That's why we reacted, swept liquidity, repriced. Now we broke the structure. BOS from that level. Boom, 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 broke it. So where's the repricing event? Well, I just said it right there. That's why we came back up into it. And that's why we shorted it. Let's look and see if we had any divergence. No, not really. I mean, we can see in here that volume is starting to fall while price is continuing to rise. It's a very small divergence, but I guess there is still some. But this is an area of supply right in here. So we have a high, low, high, low, high, low, failed, lower low. This is liquidity. We never came back up into it. So if we get an overall retracement, I will be looking to short it. If we do get in buys first, that's awesome. Great. Why? Because we be in profit on the buys. So if shorts come into play, we can take profit, or at least partials, from the buys here at this supply. And if it goes long and we lose on the sells, great, we're still in buys. But if it goes short on the sells, whatever, we've made money from the buys a little bit, and now we're making money from the sells. Right? That's how hedging can come into play when higher and lower time frames are not in alignment with each other. Last one, Euro Swiss franc, and then we are done. So very similar. I am looking for overall continuations. We are looking for CADCHF longs. We are looking for NZDCHF longs. We are looking for GBPCHF longs. So it's only fitting to look for EUROCHF longs, naturally. So why? Well, even though we are higher time frame bearish, we are. Same sort of deal applies. We're kind of are in this counter trend pullback phase, right? So we are looking for overall retracements. What we did do, at least, was we swept this previous low. I'm not going to say this is a liquidity run because we're not bullish, we're bearish. But the fact that we swept the previous low first and have now started the retracement gives us more probability. All right, let's just say this were to have occurred right here and we went like this. Well, is it as highly probable? No, because we haven't swept the previous low yet. So price could easily just fall at any point in time. But since we already swept the liquidity and then we started to accumulate and then we broke the structure to the upside and starting to make higher highs and higher lows from a higher time frame pullback perspective, I feel more comfortable looking to buy this, even though we are counter trend. So just be careful. We have unmitigated levels of supply up in here. Looks the exact same as AUDJPY and NZDCHF. So just go back to those pairs and take a look. Very similar. We have equal highs we need to run. We have this descending liquidity we need to run. What we're seeing here is, first and foremost, let's look at the structure. So low, high, low, higher high, failed to make that lower low. We never made the lower low and instead made the higher high. So now we're starting to shift, and that's why I just look at it from an accumulation standpoint. Okay. So where is our last point of demand? Well, if this is our pullback and that's our expansion, let's look at the counter trend. Well, we have a low, high, low, high, low, high, low, high, failed, higher high. That's our last selling volume. We have a huge imbalance, a straight buying volume there. So that would be that unmitigated level of demand. And we can see we never came down into it initially, which is okay because it just creates more liquidity. We have this channel, 1, 2, 3, 4, 5 touches, 1, 2, 3 touches. We can see retail's probably involved in the channel here. We had a little bit of a fake out. So people tried to buy. I'm sure people are trying to sell within this breakout here, but then that creates liquidity taken on either side of the market for the mitigation to continue long. So that's what I'll be looking for, building confluences. Of course, guys, I could be 100% wrong with every single piece of analysis from here on out until the end of time. Obviously close to impossible, but could happen. Why? Because nothing's guaranteed. But you build confluences and you're patient with your setups and you don't care if you win or lose because winning or losing is just there to flatter your own ego. It's all based upon numbers. If you understand your system works and you're disciplined with it, who cares if you win? Great, you're following your plan. Who cares if you lose? Doesn't matter. You're following your plan because you know you're overall profitable from a long-term basis. The people who lose are the ones who look at the short term, the instant gratificationers. People who fail instantly and immediately quit. People who fail instantly and think it's that strategy they're learning is wrong. No, it's the trader that's wrong. It's not the strategy, it's the trader that's wrong. Just because you make a good amount of money in a trade doesn't mean you're a Forex guru. Doesn't mean you're a professional trader. It just means you want to trade. But the people who prevail are the ones who can do it consistently. Not win consistently, but lose less more consistently. Right? Make money in the long term. All right. As you guys know, of course, I don't sugarcoat anything. Very straightforward because I need to get the point across and I need to hold you guys accountable. Because why are you here? Why are you watching this video today? You want to learn, right? You want to make money. Well, if someone's going to come on here and just be nice to you all day and just be like, oh, it's okay, guys. You're going to be okay. You can do it. You can make it. How is that helping you? But if you understand the problems that you guys are facing, and again, I don't know who's facing what problems. You have that. It's just a rhetorical question. Like, what problems are you facing? Like, you just answer for yourself. You know. So going through failure and understanding that hard times come is a result of the process. It's just a part of the journey. Doesn't mean you're doing anything wrong. It just means you have to keep going, keep learning, keep experiencing. All right, guys. So I hope you learned a lot from this video. If you have any questions whatsoever, I don't care who you are, Could be my VIP, could not be my VIP, whatever, doesn't matter. Hit me up, ask me questions. I'm willing to help you guys, right? But if you are interested in taking your trading to the next level, understanding exactly how I look at charts every single day and simplifying your trading, just go to my website. It's simple. Book a call, talk with me. If it's right for you, great. Let's get you signed up. Let's get you going. Work with me personally. I'm going to mentor you one-on-one. If it's not the right fit for you, at least you booked a call. At least you know it's not the right fit, right? Take that leap and we'll figure it out. If it's right, great. If it's not, we'll give you advice and wish you the best of luck going forward. And then at least you know that you can move on to the next, right? So have a great weekend, guys. I really appreciate your time. Have a great rest of your day. Cheers and happy trading. Good luck next week.